Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is Forex Quick Look. I'm going to take a look at the dollar versus Canada as we head toward the close of the trading week and look forward to next trading week. Looking at the hourly chart, we did have some consolidation pricing right through here at the start and into the New York's trading session. As a matter of fact, even through the U.S. non-farm payroll report, which showed much stronger U.S. jobs report. The reason why we had this up and down price action here was that Canada also released their jobs report, and it too was better than expectations. So the market was a little bit unsure of which way it wanted to go. Traded above and below the 100-hour moving average. But then as yields started to come down in the U.S. and the dollar started to get sold off, stocks started to move to the upside. Everyone started to get squeezed. And stories about how, well, this number wasn't all as bad as it made out to seem. We started to see the dollar versus Canada start to move to the downside following the U.S. dollar in its track lower. And in the process, the price moved away from the 100-hour moving average. It's a blue line in this chart at 137.123 and went below this other swing area right through here. The swing area was defined by different swing highs through here. That became a swing lows through here as the market tried to move higher, and then back to swing highs right through here before moving to the downside. We returned to that area right through here where the market did a fairly good job of trying to stall against that level before moving higher and then breaking to the upside, moving to our high price that we saw in trading yesterday in the dollar versus Canada. And in trading, that move to the upside was quickly reversed. Actually, yesterday had a down and up, but back down type of day. And in trading here today, we saw this consolidation here before the non-farm and Canada jobs report moved to the downside. So getting below this area, which, by the way, when we broke below the level, we started to use that level as resistance. So that in turn shows that this area is going to be somewhat important going into next week's trading. So be aware of that. 136.69 to 136.76. Need to get back above that level to increase the bullish bias here in the dollar versus Canada. Conversely, on the downside, what do we have? Well, we came down and we tested the 38.2% retracement at 136.42. So what does that say to me? Well, when you do have a trend-like move to the upside, let me get rid of all these lines here, I'll restart. When you do have a trend-like move to the upside like this one right here, what you want to see is a price to correct lower and get below the 38.2% retracement. It kind of proves to the sellers that they have some oomph, they have some skin in the game. It's not just a move to the upside, correct to the 38.2% retracement and move back to the upside, right, like that. It's more of a, well, we can go further. We can go further. So we do have to get below the 38.2% retracement, and then we start to look toward the 200-hour moving average here at 136.16. The price has not been below that level since earlier this, well, 1, 2, 3, 4, 5 on last Friday's trade. As a matter of fact, the price moved above that moving average and started to its run to the upside here in the dollar versus Canada. So we need to get below that level on the downside, and then we start to look toward this swing area right here. Now I'm going to go back in time here to this area right through here where the price did something similar to over here where we had a ceiling. These patterns develop, they repeat themselves. Had to break to the upside, then came back down, test this place, went back down, came back down to the area, and then broke below this level before moving to the downside. So this area is very similar to this area up here, except the moves to the upside were less up here than they were here, but same story where they reestablished resistance here before moving to the downside like it did here. So this area is going to be another key target, and also anchored by the 50% retracement at 135.99, getting below 200, getting below this swing area, getting below the 50% retracement opens the door to the downside. Now, you remember I told about this level right through here, and it's still in play. The price needs, if the price is going to go higher off of here and start its rotation, it's correct, this is a correction, start moving back to the upside. We need to get above here, and then we'll start to look toward the 100-hour moving average. That would be the next key target on the top side, that if we were going to move higher, we got to get above that level. If we do that, then we'll look toward the 137.36 and up toward the 42-ish type area here before we start to move to the upside. So watch this area right here, watch 38.2, and those are going to be key barometers for next week's trading. We'll see how it all pans out. My name is Greg McCloskey. Good fortune through trading.